Welcome back to the Crypto Alpha Network. Before we head into today's alpha, do us a huge favor by liking this video and clicking on the subscribe button. We'd love to hear from you, so don't forget to leave us your thoughts in the comments below. The global debt crisis is heating up, and there are reasons to believe Bitcoin will benefit both now and in the long run. This is super bullish for the leading crypto, but altcoins might not see the same love just yet. With everything lining up, could Bitcoin hit a new all-time high within the next week? Bitcoin is at $107,000 after 6 straight weeks of gains, showing strong momentum. But some technical signs hint at a possible turning point. Bulls have held key price levels and brushed off dips, but to keep the rally going, they need to avoid weekly drops and push the RSI above its December 2024 high. If they don't, we could see a bearish signal, possibly pulling Bitcoin back to $90,000. With the Bitcoin conference from May 27th to May 29th coming up, breaking above $109,000 could spark new highs, but stalling might cause a correction. We are going to look at what might happen in the short term, but then we're going to focus on something really important, which will shape the long term, a looming debt and bond crisis. But there are a few reasons why Bitcoin might dip soon, even though they don't change the bigger picture. First, the golden cross is about to form, but the last 2 times this happened in this bull market, it was front-run by a quick 5% dip. The M2 global money supply, which Bitcoin seems to be tracking, shows a small dip soon, before climbing to new all-time highs. Liquidity data shows $740 million in short liquidations, between $105,000 and $109,700, but $1.38 billion in long liquidations from $105,000 and $98,900, meaning market makers might push for a drop. A hyper-liquid whale with a nearly billion-dollar position, now partially closed, could be a target for market makers, with liquidation levels also around $100,000 and $101,000. These short-term dips don't matter much long-term. Everything remains bullish for now, and over the next few months, things could get even better. Besides the M2, which shows Bitcoin could see a new all-time high within a week, the Bitcoin quantile model is also worth a look. It shows Bitcoin's price over time and how risky or hot the market is using colors: red for overheated, risky, yellow for transitioning, and green for ready to grow fast. At $107,000, Bitcoin's in the yellow zone with a 64% risk score. Now, breaking above $109,000 could push it up fast, and it will enter the acceleration phase, aka euphoria. But the most bullish catalyst for Bitcoin could be the debt issues we are seeing on a global scale. Worries about US debt losing value is creating fear, uncertainty, and doubt. With US debt over 120% of GDP and interest payments projected to hit $1 trillion a year by 2030, people fear the US might struggle to pay its bills without devaluing the dollar. Some countries like Japan are selling US treasuries, worried that future debt could be worth pennies if the dollar crashes. But Japan has another underlying issue. Japan's economy shrank 0.7% in Q1 2025, with inflation at 2.9% and bond yields at highs. The Bank of Japan raised rates to 0.5% to fight inflation, but fears of US tariffs and a weaker yen are creating chaos, disrupting yen-based trades and adding uncertainty. Japan's bond market is in crisis with record-high 30-year and 40-year yields, 3.17%, and no bids for multiple days, signaling a potential implosion. Japan's debt-to-GDP ratio exceeds 250%, the highest globally, worse than Greece's 160% during its crisis. Japan, the largest holder of U.S. debt with roughly $1.13 trillion, may sell U.S. treasuries to stabilize its market and bring money home, risking a treasury market collapse and global financial instability. Overall, the world's $300 trillion debt pile, per the Institute of International Finance, is fueling fears of a debt spiral. With U.S. interest rates at 4.55%, and Japan's at 0.5% comma bonds should look appealing. But doubts about government's ability to manage debt are growing. If central banks like the Federal Reserve print more money to cover deficits, it could devalue currencies and spark inflation. This is pushing investors toward assets like gold, $2,700 per ounce, Bitcoin just over $100,000, property, and silver as safer bets. When it comes to Bitcoin and gold, we've seen an increase in correlation between them. That started in March. Investors worry the global debt bubble, worsened by high rates and policy risks, might burst, making bonds and fiat money less reliable. Stocks can grow with inflation, but face risks from tighter policies, while property and metals like silver are also drawing cash. Big players like pensions and banks still buy bonds, but smaller and speculative investors are chasing assets with limited supply. The money printers are about to turn on. The US, Japan, and other countries facing similar problems may soon start printing money to avoid bigger issues. This could lead to problems like inflation, as people in those countries see their money lose value. This is why many are turning to Bitcoin and other assets we mentioned earlier to protect against that kind of inflation. When the money starts flooding in, those with extra cash will likely buy up more Bitcoin, pushing price even higher. Markets are flocking to safer assets like Bitcoin, and the ongoing global debt crisis hints that this won't change soon. As the debt crisis worsens, countries under pressure will likely print more money to solve their problems, making assets like Bitcoin pump. M2 could shrink if banks fail or lending dries up. Central banks might expand money supply through quantitative easing to stabilize markets, temporarily boosting M2, though confidence loss could limit its impact. All roads seem to lead to Bitcoin. Altcoins might struggle for a while until capital trickles down to riskier assets. Investors are likely waiting for macro clarity, a Bitcoin all-time high, or a major pullback to buy altcoins. Altcoins have been lagging for weeks or even months, depending on which ones you're looking at. To understand what's happening, we need to zoom out and check a higher time frame chart. No one can say for sure. And as always, this isn't financial advice. Do your own research. With investors leaning towards safe assets while waiting for the Bitcoin dynamics we discussed earlier to cool off. As Bitcoin's price rises, capital could eventually trickle into riskier assets like altcoins. This could align with the longer time frame. Meanwhile, it's not just market participants ignoring altcoins right now. The SEC seems to be in a tough mood, as evidenced by the following. SEC postpones approval for 21 shares spot. XRP ETF SEC defers ruling on Grayscale spot. Dogecoin ETF SEC delays. Decision on staking for Bitwise spot Ethereum. ETF the focus remains on Bitcoin for now. For altcoins, we'll likely need more market hype before seeing a real move, which could come if Bitcoin hits new all-time highs. We expect altcoins to lag a bit longer, especially until there's more clarity in the market. Long term, everything seems to remain bullish, and maintaining a cautiously optimistic approach is what we are doing. If things go according to the M2 thesis we've been following, Bitcoin could break an all-time high within the next week or so. What do you think? Is that going to happen? Let us know below. Before you go, help us increase mass adoption and get the word out there by liking this video and clicking on that subscribe button. We'd love to hear from you, so don't forget to leave us your thoughts in the comments below. Bye for now.